Hello, welcome to My Finance Teacher. We have been waiting for the FOMC meeting and we got it. We have been waiting for Fed rate hike and we got it. And we've been expecting gold to bottom just around the dates of that Fed rate hike. And what we saw on Friday is a collapse in gold price close to about a couple of percent, $25 down in one day. Is that the bottom? I don't think so, but I think the bottom is coming very close, coming soon. Let's have a look at more details. Looking at this chart, this is the daily chart of gold price. What we see on this chart? Well, if I zoom out a little bit, I could continue zooming out, but basically this is enough. Generally, what I want to point out is that intermediate cycles in gold last for about half a year. The current one has been going on since mid of December last year. Adding half a year gives us sort of middle of June, something like that. And I think this downward momentum in gold is going to continue for another, well, several days, just mostly because of some inertia, because of some emotions that people have, some scare on the market. Everybody's going to dump that gold because it's losing a lot of value, 2% per day. But I think this decline is not going to last for long. And there are a number of reasons why I think so. Firstly is, of course, the duration of the cycle tells us that we should be close to the completion of this cycle with the cycle low, and we should be close to entering to an advancing phase of the next intermediate cycle in gold. That's one reason. Another reason that also sort of confirms that we're close to finishing this cycle is that the price is already getting somewhat stretched far below these moving averages. There is a 200-day moving average here, 100-day moving average here. And looking at RSI, generally at these cycle lows, this RSI, this is a 14-day RSI, gets close to oversold or into oversold levels. It doesn't even always go to oversold levels. Actually, sometimes it is only close to oversold. And that's where we are at the moment. So we are getting very close to this cycle low. This cycle low sort of arch might look something like this once we have actually finished this cycle. And after a few days of decline, I don't think we're going to go that low. After a few days of decline, we might see a rise in the gold price over the next couple of months at least. So that's one of the things that I wanted to show you guys on the daily chart. And another sort of factor why I think we are close to entering a rally in gold price is this chart of daily chart of dollar. Again, zooming out a little bit, one might sort of see half a year cycles on the dollar chart, although there are a lot of exceptions to that duration. But sticking to that half a year cycle, the current one has been going on since mid-February, and that tells us that dollar is getting close to the time when it should enter its declining phase of this cycle. And if dollar is going to decline for several weeks, for a couple of months, that just plays into the hands of gold and its rally over the next couple of months. So that's another factor that makes me think that gold is sort of bottoming here. Looking at the weekly chart of gold, well, in December 2015, we kind of finished this long-term bear market in gold, started in 2010, 2011. And after that, we had a nice pop in gold from around 1050, 1060, all the way up to 1360, a little bit higher than that. Of course, after such a strong move up, one might see or one might expect a very strong correction, which we did have, going back down all the way to 1130 or so. But since then, since that sort of crazy volatility, every time that the weekly chart got to this 100 week moving average, every time it did it, there was a nice buying opportunity. And that's where we are at the moment. Again, as I said, we might continue down for another, well, several days, I think maximum a week. And after that, I really do expect a rally in gold price. Just as I mentioned in my previous video, right around the Fed rate hike, we might expect a bottom in this intermediate cycle in gold. And lastly, looking at GDX, unfortunately, I kind of started accumulating GDX a little bit too early, since sort of early May. But actually, since early May, there hasn't been that much change in GDX price, even though gold price since early May, where we are here, somewhere here, has sort of declined quite a lot from, well, let's say 1292 all the way down to where we are at the moment, 1274. GDX, this is a weekly chart, of course, hasn't changed that much after this significant decline, sort of in the middle of May, which we saw over here on the daily chart of gold. We haven't seen that much change in the GDX price, in the price of GDX. Well, what do I want to talk about at this chart? Well, this is a weekly chart comparing that weekly chart of GDX to this weekly chart of gold. One thing I want to talk about is, let's have a look at this channel over here that we've been after this nice pop that finished the bear market in gold. We see an upward trending channel in gold itself. What do we see on GDX? Well, what we see on GDX is only sort of a horizontal channel, which actually is getting even narrower as weeks and months go by. The Bollinger Bands are getting very narrow. Let's have a look at the Bollinger Bands over here. So I'm running ahead of my ideas here. Firstly, gold is trending upwards within this channel since the beginning of 2017, whereas miners GDX is not trending upwards. It's just moving horizontally. This, I think, cannot continue forever. At some point in time, miners should start sort of catching up with gold, and if they had been underperforming, they will be overperforming in order to catch up with the gold price. That's one point I wanted to make here before I was running ahead of my ideas with the Bollinger Bands. And looking at the Bollinger Bands, they're getting really narrow over here on the weekly chart. Even over the last several weeks, they're getting even narrower. And history tells us that it's a prediction or sort of a forecast of a strong move in any kind of asset. Whenever Bollinger Bands get really, really narrow, that's when we often have very strong explosive moves, either upwards or down, but I don't expect gold to go down as well as the miners, as I mentioned in the video where I talked about the cost of mining gold. I'll put a link at the top of the screen at the moment. So lastly, coming back to this daily chart of gold, let's see if next week we continue sliding down a little bit, maybe going down to 1270, just below. And let's see if after that we're going to see a nice rally over the next at least couple of months. Of course, there will be some corrections. So that's my expectation. Share your opinion and hit that like button.